Again, we're meeting to discuss the data release. This time it's going to be from US, CPI, as Doc already mentioned. And at the current moment, the forecast stands at 0, whereas the prior figure stood at 0.2%. And it's going to be a month-on-month release. So, the consumer prices increased 0.2% in October. After 2 straight months of declines, rising prices of gasoline and a range of other goods caused this modest increase in CPI. The reading was in line with market forecasts. Meanwhile, core CPI, excluding food and energy costs, closely monitored by the Fed, also gained 0.2% after a similar rise in the previous month. This is a positive sign for the coming months, and CPI is expected to remain flat, while core CPI is expected to climb 0.2%. Let's see what do economists think on the matter. Here we have a chart. You can see top banks around the world are definitely on the list, and according to their views, we have the Bloomberg survey summary where the median estimate for US CPI stands at 0%, average estimate stands at 0.01%, high estimate stands at 0.2%, and low estimate stands at minus 0.01% respectively. And talking a little bit more about the forecast, so the mildly positive reading for pricing pressure inspired some economists to consider the possibility that inflation is firming actually, and thereby offering support for the Fed to straight raising interest rates at tomorrow's monetary policy meeting. The year-over-year trends for headline and core CPI haven't changed much recently, although if you look closely, you'll see a slight upward bias in the annual pace of inflation after stripping out energy and food. But that's a thin read for arguing that monetary policy should be tightened before the year is out. In fact, the number du jour are projected to show fresh weakness for last month's profile. Econoday.com's consensus forecast sees no change for headline CPI monthly comparison, down from October 0.2% rise. Meanwhile, core CPI, consider a more reliable measure of the trend, is expected to rise 0.2% for November in monthly terms, matching the previous gain. In other words, no big changes are expected for today's inflation update relative to the previous release. Soft inflation persists. The Fed's 2% inflation goal is a near-term possibility based on core CPI's 1.9% annual rise, although headline CPI's year-over-year pace is close to 0. Using this data as a guide, there's still a weak case for the Fed rate hike, and it's unlikely that the November release will offer a different view, and that's according to Saxo Group. We have a couple of minutes left, and traditionally we'll have a closer look on what do community members expect from this economic data release. And as you can see, the traders are rather bullish on the US dollar. Japanese yen currency pair, that is 58.93% versus 41.07% bearish. Sorry, and we have a couple of comments. For example, Petra says that while she's expecting good results from UK CPI announcement, the US another pot of kettle, and the results for November and October were the same, but the results showed a positive change from September to October. The forecast for this month is expecting the same as last, so that might not go so well. Market impact is noticeable if there is a positive or negative change, but no change can be followed by a very dull reaction and not in support of the currency. and that was Petra and Freeman says that the current trend in the greenback is not very clear because it entered a downward trend after ECB put a hold on their asset purchase program. As the euro has been gaining, the dollar has been losing value, but CPI reports have not changed for 2 months, and it's not supposed to change this month according to forecast, thus he is bullish. And that's pretty much it on the fundamental part of the economic data release. And now it's time for Max to break the ice and speak some technical stuff.
Thank you very much, Polina. Hello again, everyone. So yes, after the UK CPI data, we are finally turning to the US, the same type of data. And as Polina has already mentioned, we have the expectation of zero change for the headline CPI for the US in November, while the core reading is expected to remain unchanged at 0.2% month on month. At the same time, there can be some negative impact from the recent drop in oil prices, which resumed already in November. So it could possibly translate also to the US inflation reading for November. And that's why we have a negative surprise trading strategy today. The US dollar Japanese yen currency pair for the discussion. And as you can see, this currency pair does also have a negative sentiment right now. More than 54% of all open positions are short on the US currency, while the pending orders on these currency pair are pretty much flat right now. They have a slight bearish bias of 50-51%. At the same time, the market sentiment provided by other market participants shows that the majority of their traders of Oanda and FAXA group traders are going long on the US dollar against the Japanese yen at the moment. Okay, moving on to the current market situation, we see that the pair has somewhat declined in the last 20 minutes or so after trading basically flat for the last 1 hour, and currently it is placed just below the major level, the major round level of 121. And of course, as usually, to project the possible reaction of the market after the data is released in around 2.5 minutes from now, let's have a look at the previous market reactions for the US CPI data. And as you can see, for the Japanese yen, for the dollar Japanese yen currency pair, the reactions used to be quite moderate, on average just 19 pips, which is below, if you remember from the UK CPI reactions of above 30 pips. Also, taking into account the importance of the Fed meeting and the Fed decision on the interest rates tomorrow, it is also possible that everyone is already focused on that particular event, and the reactions can be smaller today, even for such an important piece of data as the US CPI, as we have seen it already for the UK inflation data, when there were no strong reactions at all. Okay, but nevertheless, in case we take the average market reaction as the benchmark, we can place actually the take profit level just some 15 pips below the current spot price, which is supported by the 4-hour pivot point at the moment. And of course, in case we see the positive surprise from inflation, in case it happens, we also can observe the US dollar's value spiking to the upside back to the area where this currency pair has traded some 1 hour ago, around 121.15, which is the 4-hour R1 resistance, which supports this particular level. Okay, since I have just 40 seconds to go, let me mention the technical indicators, which are, by the way, are pointing to the upside today on the 30-minute and the 1-hour time frames. At the same time, they are going back, they turn back bearish on the dollar on the longer term time frame, on the 4-hour and the daily ones. Okay, I guess we just have some 10 seconds to go. By the way, along with inflation, we will also see the numbers for the Empire State Manufacturing Index, which is also very important for important piece of data for the US. I hope we will see all of them in the chat section, and we will see the numbers in just a couple of seconds. Okay, yes, the US CPI. Actually, the month-on-month, I guess the headline reading was unchanged in November. I guess there is a kind of mistake because the expectation was really zero for month-on-month change, while the core CPI is also published pretty much in line with expectations. It rose by 0.2 percentage points. Speaking about the annual readings, there is a positive surprise from the core reading and also the headline reading, because both of them rose. The core reading rose to 2%, actually, which is the Fed target rate of inflation, which is a very positive sign. While the headline annual CPI advanced to 0.5% from 0.2% month-on-month. And speaking about the Empire State Manufacturing Index, it was released slightly better than expected, even though it is still declining. It is in the negative territory of 4.59. It is better than expected. The analysts had anticipated this particular index at -7 points. I guess it is for December already of this year. Speaking about the market reactions, as you can see, the US dollar has actually increased in value in the last minute, reaching the first stop loss level as it has been anticipated, reached the 121.13 level, but now we see a slight bounce back from the dollar's value. At the same time, the reaction is smaller than average for the last 5 months, and as I have already mentioned, possibly everyone is already focusing on the Fed decision, which is due tomorrow. Okay, I guess that for the technical part, now that will be all from my side for today. Thank you very much for listening. I wish you all a great day ahead, and back to you, Polina.
Thank you, Matt. Thank you, everybody who joined this economic data release. Basically all eyes on the Fed tomorrow, and I definitely won't say anything new at this point. Just that definitely stay tuned, because right now Doug will continue his webinar on algo wars.